The volatility index, or VIX, often has been considered one of the best indicators of fear and greed in markets. But in 2023, it's just not working for us. Why is that? Hello, ladies and gentlemen, and welcome back to the Daily Show. We discuss stocks, commodities, and cryptos together. Today, we need to talk about the FOMC and the lead up in volatility into the event. We just saw some large trades, and the last time we saw this on the VIX was March of 2023. Remember what happened? A little bit of a spike. So as we coil in the market, we know there's going to be some volatility coming up. We also need to understand this a little bit more. What just happened with yields? Is this a glitch like everyone's saying, or is it something a little bit more sinister? And the question also has to be asked, what is going on with oil? It just hit our $92 plus target that we've had on the channel for a little while, and it looks to be set to potentially even break this high. Ahead of FOMC, we need to think about a game plan into what has traditionally been a pretty big inflation mover. Well, welcome back everyone to the Daily Show. We discuss macro lead indicators and of course the hottest charts together. If you like anything to do with markets, make sure to subscribe and smash that like button if you find value in today's video. Let's begin by discussing the last 24 hours. Nvidia, it was down over 3%. Then it came right back up and finished in the green. Surprising how well and how resilient it was in the markets. Tesla, however, did suffer. A late print from Friday's close came in, and it turns out there was probably a large couple of sellers that were in Tesla, and we'll talk about that more very, very soon. Let's also discuss bullish percent index. We've been talking if the market's recovering, we usually expect this indicator to show us some big white candles here. It didn't do so. It made a new low over the last 24 hours, and it's definitely a cause for concern for bulls in this market. So what else do we need to talk about? Let's go with oil first. $95 a barrel is something that we need to think about. It is possible if that does occur, we could be in breakout territory, and a real concern here for markets will be the fear of the unknown. I think markets are still okay with it being at this point, and we've discussed how we believe there's resistance or even sellers that sit around this area. But coming into the FOMC event, we'll need to set some alerts. $95, 93 plus, which is this high over here, will all need to be set up. And of course, we're looking, if you're a bull here in markets, for oil to kind of start to decline a little bit and not continue to go up. The more oil's going up, the more chance there is that the Fed will continue to pause or even potentially bring out a rate hike. And if they do even signal a rate hike, I don't think the market's going to like it this time around, as things are starting to soften in the economy. Let's move over to the statistical data of this week. We know it's a bad week statistically. Day number one, well, we'd call that sideways. But by the end of the week, traditionally, we've been down anywhere between 0.7% or even more. And when we look over a 50-year kind of history of this, we know that we tend to see a sell-off through the back of September. Of course, this is just data and it doesn't mean that's going to happen, but it is something that's been statistically relevant for quite a few years now. We've also seen here that of the last 50 years, we tend to go in streaks. Now, you'll notice there's a lot of reds between September 19th and 26th, but sometimes there's some nice like little green runs. We're currently in a bit of a topsy-turvy because of the last 50, 17 have been bullish, 33 down, and we had 4 sell-offs, 1 positive, and then a brutal one in 2022. It was negative 6.28% in this week. So I expect some volatility to come through later on. Let's move through some large trades that came in. First up, Tesla, late prints coming through across the board. Some large trades that we have to assume are probably sells. This is off Morgan Stanley's $400 price target. Of course, we saw that huge raise up in Tesla. It broke through some key levels and made it a little bit hard to look at in the charts. Now, where could we come back down to? Well, it seems very plausible that a 250 gap fill could be open for Tesla. And I think that's probably where we're going to find some buyers to maybe recommit to the actual stock itself. But it wasn't just Tesla that had some large trades on it. We had a big one come through from Nvidia, and maybe this explains why the market actually did end up getting a rally through the Monday trade session. Some big sells probably at that 500 or just underneath 500 target. And then, of course, around 440, we may have just seen a buyer. I do think that we're in a sideways action for Nvidia, AVGO, or Broadcom, and a few of those others for a little while here. And while they're great stocks and no doubt pretty good long-term investments, the price seems to be stabilizing here and may even fade. And we're going to continue to look for large trades because I've never seen so much trading going on in Nvidia ever. And it's just huge positions all over the place. And that's usually symptomatic of a little bit of trimming. Some funds, of course, are adding, but I also think there's a bit of trimming going on at these highs and this valuation. Now, UVXY, what is going on here? Well, this is the ProShares Ultra VIX short-term futures ETF. Now, we haven't seen a large trade on this for quite some time. In fact, the last time we had this was March of this year. After that point, we saw basically a 10% plus spike of the VIX. So it looks like somebody thinks the VIX is going to go up, and it seems to be a large player. Now, they're probably betting on the FOMC being maybe not considered to be volatile enough by the market at this stage, and we'll look at the VIX a little bit later on, but an interesting trade nonetheless. Oil also getting tons of activity on it. I still think these are probably sells or trims from the street. United States Oil Fund coming in with some multi-prints sitting at these highs, and although we are not looking at any weakness yet in oil, we did just hit 92.50 for the barrel. And of course, we expected us to go to 92.50. So therefore, we've hit a lot of take profit targets. And if you've been holding oil all the way up through this run, congrats to you. Very, very nice moves. Some other large trades coming through the exact same zone here with USO. Let's move over now to options before we go into the charts. And there's some good charts to look at today. But it was a very slow day. I mean, there was almost nothing here that was above the 90-day average volume. Moderna, though, something that we probably should be looking at, down 9.1%. This thing keeps getting hit and hit and hit in the markets. And of course, there have been some okay trades with it, but we will be looking at that at some point soon on the show. Take a look at this, 53% calls versus 47% puts. But look at that, only 30 million in trade volume. Very slow after a monstrous options Friday. Everyone was taking a break for sure. When we look at the actual trade through the session, it was a couple of interesting sectors getting hit. Notice this, regional banks. Now, we saw a spike in yields. Then regional banks just suddenly start to suffer a little bit. 2.74% or 75% down through the session. Very interesting. Not a lot of defensive plays, usually staples, healthcare, and utilities. You want to see them going stronger if it's a defensive-like market. But semis were out in front. 5-day average now, gold still the best. Metals, so an inflation-based trade. Utilities, and then, of course, energy, another inflation-based trade out there in front. Now, this is what everyone's discussing over on X and Twitter and with the same thing, and I'm sure every other social media platform. What the hell just happened here? I don't know if we even have the answers yet. If you do have the answers, message me over on Discord. I'm pretty sure it's a glitch across the board and it's probably false price. But imagine if that was random backwards intervention. What I do think is very interesting about this, though, is just what this would have done to the markets. It would have absolutely collapsed a lot of the regional banks, and I think there would have been significant issues. And the reason I want to bring this up is because, remember, the US 10-year is pushing these highs. And we know that in the past, when we've seen these highs, we've tended to break something. So when we've gone back near these highs, something in the system is breaking, okay? And we need to be aware of that. And I kind of brought this up a little bit during August. And I said, look, we've got these highs here, which of course we saw in August. Usually something's been breaking. It's been pretty consistent. We've seen 4 breaks of the system now. So could there be intervention coming or something that we don't know about? I think the Fed may need to walk very lightly here on what they're seeing in these markets. Maybe it's a little bit worse than we think underneath the hood, even though the economic data looks like it's totally juiced out of control. Let's have a look at the breadth of the market or how things are looking in terms of recovery. This is the amount of stocks above the 20-day moving average at the moment in the S&P 500. It's only 36%. We're about to make a new low here, which of course would mark good things for bears and bad things for bulls. Bulls mark out 56. If that happens, you're probably in a decent rally and you've broken through that key resistance we'll look at later on. 50-day moving average, you can see here almost new lows as well, only 30% of stocks. But the more telling one is the percentage of stocks above the 200-day moving average. It's really weakened during this August period and it doesn't look very robust. You know, we had that really nice kind of rally that came off October, December, January, but it seems like a lot of the stocks have started to falter while AI or the Magnificent Seven are holding up this market in a very strong way. And of course, that's why when you look at things like Dow Jones Transportation Average Index or, of course, equal weighted funds, they're starting to look a little bit shadier than, I guess, the rest of the market. Speaking of Dow Jones Transportation Average, you can see here it fell low. We will want to have alerts here just in case that happens, so make sure you set alerts. It's usually a little bit of a canary, this particular one. So we can see here in July it started to weaken, and that kind of pointed into maybe a weakness in August as well and a weakness across the market. And we've looked at this in the past as well. Here's the August period, and of course the sell-off that occurred. We bottomed in this actually in September. And remember, the rest of the market bottomed in October. So this, along with home builders, can be used quite well. And speaking of home builders, I'll just move that over here. You can see that it's getting close to potentially breaking through a significant low. Now, if home builders goes down, that's not good for the market. So, of course, for swing traders, you'll be wanting to look at this. And we don't know that yet. Of course, we're on tenterhooks. We know that September can be late kind of sell-off. But generally speaking, in pre-election years, we tend to have kind of that beginning of October, maybe further weakness into strength through October, into November, into December. So certainly we'll be watching some of these indicators, because if they go off, there could be problems. The volatility of the volatility spike possible here. So add an alert, make sure you've got like alerts for things like something like 88 plus. We know the VIX itself has come off 12, so it's got a marking here. I've set a little alert around 14.5 on another platform. So effectively, we're looking for the VIX to show us that it's wanting to spike. Remember, there was a large trade effectively going in for the VIX. And I'm not a VIX trader. I don't trade the VIX. I think the roll contracts are brutal and you get smashed. But if you are having a look at it, we can use it sometimes as a bit of a fear or greed. The skew also, is it creating a double top? Again, if skew's going down, market's hovering or going up, that's usually a bit of a negative sign. You know, you want the skew to kind of be going up, not down. It's kind of contrary in that aspect. You can see here when we saw the skew kind of going down, we ended up bottoming off around that October, November period. And then, of course, it's been pretty strong or holding up for the rest of the year. So watch the skew, but at this stage, could be creating a double top. Also, have we just seen peak iron ore? Well, according to Rio, which is a huge, of course, miner of iron ore, then we've just seen them say that China's peak iron ore consumption is coming soon. That's what they claimed today in the news. But it did kind of knock around iron ore here. It was down 0.9%, but still a very nice breakout in metals. We're watching this because in general, you tend to see metals go really well through September and then start to drop off in October into November, and then possibly go well again December, January, February, that type of period. And it has something to do with the kind of last period of time into the new year for China, but also it has to do with the public or the kind of perception, and of course the meeting that's coming in October for the party. What about the most powerful kind of stocks of the stock market? Magma, Microsoft, Apple, Google, Meta, Amazon. Of course, there is the Magnificent Seven, but we're using Magma here as a bit of a gauge. Still weak, but no new low. So, of course, watching that one. Dollar index, nothing to report here, guys. It's just completely stuck in the middle of nowhere land. So if you're looking at dollar index futures, you'll see that we're kind of stuck there. And I'm not really making anything on that just yet. This is a surprising one. It does kind of point that gold might finally buck the trend that's been the worst for years. And it's kind of telling us that we could be in stagflation. Remember, if yields go down, should be good for gold. If yields go up, technically should be bad for gold. So if yields do end up spiking through to new highs, I wouldn't be necessarily that positive on them initially, but it seems like someone's trying to push this higher. There will be stop losses that are sitting here. This will have closed above those, and it kind of looks like there could be squeezes to go. Now, where I haven't been bullish is, of course, gold spot. Where I have been bullish has been gold stocks. No new high yet for gold stocks, GDX, but still looking a lot better on the charts. And things like Barrack and stuff, if you're having a look at those on the charts over here, you will see that they've been kind of improving and making new highs. So Barrack made a new high on the Friday, and you can see it's kind of looking like it's trying to put a base in. Put this in perspective of spot, and you'll kind of get an idea of why I say gold stocks are cheap. This is August of 2020. This is where we are right now. This is where we were in 2013. So yeah, gold stocks a lot cheaper than the gold spot itself. US oil, as we mentioned before, setting 94 kind of alerts will be important around the FOMC. And we've hit what I would usually say is a take profit zone, or an area of statistical probability of being some kind of sell zone around here. I wouldn't be surprised if it does something like that. But yeah, I don't know what's going to happen with oil now. It's hit our targets, and this is where it becomes very interesting. A lot of people in the community, you guys predicted that in 2 months, oil would be $95 to $100. Let's see if you're correct, but it's no stopping it at this stage. Now, Tesla, large trade came in on it. You could argue it's a gap up with a gap down now, so therefore further selling should be present. 250 marks a very important area. Not only will it fill around that gap, so fill the gap from the Morgan Stanley upgrade, but but also it goes back into this demand zone. For bulls, it's going to be an important zone. I don't know if anyone's really buying it here, but I do think that 250 will have somebody sitting on it. Now, could it go lower? Of course, this is just an area where I'd be looking for a reaction. And then, of course, we could have the patience to hopefully be able to see that and get in. But at this stage, look, it took a new high. That is significant. It's selling off. We know why. Probably those large trades were take profits from that event. And now it's just kind of dwindling down, hopefully to go to that kind of area that we saw before. What about Apple? Well, this got some weird news coming out on it and seems to be a little bit of pumpy. But at the same time, we know there's large transaction that's gone through here twice. We do not have a higher than 180.41. So that's going to be a new high alert that we want to mark. And of course, bears will want to push it underneath 172. So Apple's in a weird spot. It could be that we're in a buy zone, which I don't blame people that bought it yesterday. Of course, it was an okay level, but we do not have a turn event. So we're stuck within a coil ahead of the FOMC. And you're going to see a lot of this on stocks, unfortunately, until we get this FOMC news. Nvidia was weak, then it came strong, closed pretty much flat. So Nvidia's, I still think, is looking really weak on charts. I still think it's probably in some form of distribution, where this is kind of like the Wyckoff, buying climax UTAD kind of thing. And the reason I'm marking out this 402, it was the previous lows, and I think that probably marks the swing traders' exits, in terms of they're going to say, wow, the trend was good. Now I'm going to wait for it to come down here and then try to, buy into it. This is a massive gap. And I don't see why that won't eventually fill. That's probably a pretty big call. I'm not seeing weakness just yet that's fully there in this market. But of course, I've said many times before, a stock like AVGO to me looks like it wants to go stagnant. 3 to 6 months of sideways to down would usually be what I expect after such a rally. And then, of course, so much volume trading that went through here. You can see all these spikes on the volume. They're large traders, and I think they've taken a little bit of profit. Let's have a look at CQQQ. Seems to be trying to defend that blue line here, which we kind of are guessing that it has some kind of policy shift event that's kind of coming through consistently. As it comes down here, we're seeing kind of a scramble to bring out good news to support the markets. I'm sure there's some big problems over there. And of course, we just seem to be seeing some form of intervention each time we get to that price. So for now, kind of seems like a strong bit. The German market, supply held again. Looks like it's shorted off here. And that is a weak looking candle. There's no doubt. This could be a distribution. We know that if we come back down to this level, I don't expect it to hold this time. That's 1, 2, 3. Often the fourth time is the bad time. I've seen that quite a few times. And funnily enough, on the top end, we've got that 1, 2, 3 as well. So if we went back up here, I don't know if that'll hold as a sell. And if it goes back down here, I don't think it'll hold as a buy. So German market's interesting, although I'm not sure the trade is that great. I mean, the supply was good, but yeah, if you got it, well done to you. The Aussie market has suffered, of course, the consequences of the iron ore stuff. It also has suffered the consequences of just in general financials coming under some heat with, of course, regional banks as well. But yeah, really good take profit zone, really good entry last week, stuck in a coil range, waiting for the US, waiting for, of course, all of that. And speaking of the Aussie market, or speaking of banks in general, let's have a look at regional banks. Look at this. New low basically is incoming here for for regional banking ETF. And it came off that, remember, we were so low, then we had such a huge rally, and now we're starting to weaken again. So the market is saying, look, I'm a little scared of these regional banks with these higher rates for longer, or possibly even rate spikes. So again, there's a bit at stake here for the FOMC and for the Fed and what they're going to do. I do think $40 is a pivotal point. I would expect these stocks to probably get towards $40 at $42.51 at the time of this recording. So it looks like it wants it. That's kind of like a flag pattern. And the length, let's actually take the length together. I like to proof things. So let's have a look here and see if we've got a little proof. So there's the flag. We take it from the break. Yeah, that proofs really well to 40. So it kind of looks like $40 is wanted for KRE. And then around here, we're going to find out whether something's truly broken or there's buyers to recommit. US 2000, along with the regional banks, we're seeing weakness in the smaller stocks. Look at this. It's terrible looking. It looks really bad. About to make a new low. Obviously, that closure points towards new lows coming. If that was the S&P 500, generally you would say rallies to be met by sells, closed on its low. It's getting ready to prep through there. We'll find out. A lot of people are calling this head and shoulders everywhere now. and that's a left shoulder, head, right shoulder. So maybe it's too obvious. Yeah, it's a tough one. I'm not actually trading US 2000, but if it makes new lows, the way it interacts with this zone, I think is going to be super important. If we go instantly down, then reject with a big wick, I'm going to say that's got a lot of shorts in it, and it's probably going to squeeze up higher. But yeah, the way it reacts here, watch the channel, subscribe. We will be following this one quite closely. NASDAQ, now it put in what you would, it's a bit tough. We'll look at the US 500. I'll show you what I mean. But it tried to do what you would usually think is a turn. But if you notice here, we still have this issue. So most people are probably going to say, well, we took out this high. I'm bullish. I'm feeling good. But what about over here? What's going on over here? And this is the same problem we find with the S&P 500. So if we look at the SPX, of course, that's where we are. But if we look at the US 500, we go down to the 2-hour chart, you'll notice again, just like we said in the live stream, if you want to have a look, we always do a live stream every Monday for the market open. We talked about this idea that we probably thought sellers were going to sit right there. And that's why we set 4470 alerts. And I kind of still maintain that. I could see why people tried to buy this. I just don't know if it's going to hold. So 4430 remains a very strong point for the markets. If we get through and below that, I think we're going to 4330, so about 100 points underneath. I would say that is pretty good looking on the charts. And of course, 4470 for the temporary buyers going towards 4500. For big bulls, you guys just want the same level we've talked about, 4540, 4550. Get above there, I think we're going to a new high. What do you guys think in the comments down below, though? Let me know. And we'll have some good discussion there. Now, what about Bitcoin? Well, I'm going to say it hit my first target. I said 27.4. I said that right there. As we got here, I said it would turn around. Now, that's just what, you can gloat about it, but it's pointless, yeah? It happens. Sometimes it'll happen. Sometimes you'll fail. It's all about your percentages and your risk management, of course, in these events. Now, I can see why it's sold here. Of course, we have a supply on the left-hand side, and anything into here was certainly where I would break even, if not deleverage or even get out of the position. So 27.4 is achieved. 27.8 to 9 is not achieved at this stage. The trend hasn't broken down. It obviously sold, but it's not underneath these lows. So watching 26.4 will be very interesting for Bitcoin traders. But it's a nice little rally, and finally like a little bit of a trade considering how boring Bitcoin's been recently, and it's a very tight range there. Let's move over to the daily. You can see the rejection. So again, came up to this heavy area, hit the supply, and then sold off. Now everyone's talking about the same thing, which is of course the information coming out. We've got CPI for the CAD coming, so that might be interesting. But really all eyes are on the federal funds rate, which is expected to be 5.5%. And of course the press conference and statement. Now remember, it can often go one way during the during the statement, and then the opposite way during the press conference. Most people will be watching the press conference, and they're going to be looking for words such as we're going to potentially rate hike in the future, or we're not taking that off the table in terms of we think that we still might need to rate hike. Those kind of words are going to freak the market out should it happen. A few people are asking, what's my prediction on it? Prediction is kind of a waste of time. It's often reaction and the way the market sets up and structures into it. We're looking for some kind of liquidity steal. There's generally the event after the event, and that's why often it goes one direction, then the opposite direction. You're left scratching your head saying, what the hell happened? I do talk about a lot in my day trading masterclass as a huge strategy base for being able to be patient and, of course, then react, not predict. But in this case, the FOMC press conference, your prediction could be as good as mine. It's all about understanding when you've got that statistical edge. So be careful here. It could be a big one, and I do think it's going to hang on the words of Jerome Powell and the Fed. What do you think about markets moving forward? Let us know in the comments down below. Give us some of your predictions for the end of the week. It's always nice to see what you guys think. And thank you very much for watching and, of course, supporting the channel. Subscribe, smash the like button, hit the alerts, and we'll see you in the next one. Bye for now.